Hey everyone, Couch Investor back on our earnings video for today. So, Fiverr just reported their quarterly earnings, a double beat, and yet at the time of making this video, the stock really doesn't move that much. Now, Fiverr, the stock has been hit very, very hard, especially after that huge run up during the pandemic. Makes sense, it became a hyper growth stock, lots of adoption, etc., etc. But then post pandemic, the stock crashed because, well, growth didn't accelerate. It wasn't the same. Growth kept going down. And then in recent quarters, this isn't even a double digit growth business anymore. But they did say that this is because they're now focusing, well, for a while now, focusing on becoming more and more profitable during those unprecedented macroeconomic times, which is exactly what has been happening. The profitability side of the business has become much better. And so valuation wise, I mean, right now it's trading at around, we're going to see, I think it's 12 times forward PE or something like that. So really not that expensive. But I first want to touch on a couple of comments here from the CEO. So we continue to innovate our offerings to help our community of businesses and freelancers. And he said this: we look to finish the year strong and strategically drive growth and shareholder value. And this, in my opinion, sends a good message with regards to the profitability side of the business, but as well the growth side of the business. They are right now probably trying to position the company very well so that they can capitalize on the next opportunity that will probably come their way somewhere in 2024 when rates will come down. Because for a company like Fiverr, yes, high interest rates is not the greatest environment. But of course, there's also other factors attached to it. The global economy right now is just not that great. But there's much more to that story. We're going to have a look at the report. But first, let me show you this. So right now, stock is down 1.3%, $23.76. Market cap of just over $900 million. And then look at this. Forward PE, 12.6 times, which is probably a bit less right now. I mean, if you look at the analyst estimates for fiscal year 2024, EPS $2.14, and then fiscal year 2025, $2.78. So basically, it's trading then less than 10 times fiscal year 2025 EPS. Now, of course, I understand those that have been holding Fiverr for a while, it is very painful to look at your stock and it's been down, 40, 50, 60, 70% or so. Yes, it is very painful, and I understand those that are selling, those that are already sold, you just lost patience. This business is just not moving anywhere. So I cut my losses and moved to something else. I understand. And if that was one of the reasons, then yes, you should definitely sell. But if you do believe that this company is going to become bigger and bigger because the total addressable market is huge, then yeah, maybe right now at these valuations, it's a no-brainer. We're going to have a look at the numbers. It was a double beat, like I said. Now, before we jump into the numbers, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, would really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So let's first start with one announcement here that I want to touch on, and that's the expansion of their leadership team. So we are pleased to announce Matti Yahav as our new CMO as of November 1st. Mr. Yahav brings with him many years of marketing experience and has worked at some of the most recognizable brands. We are also welcoming Dr. Yael Garten to our board of directors. She has 20 years of extensive experience in data science, machine learning, and converting data into actionable products and business strategies. So welcome to the team. Then, as for the third quarter results, so revenue increased 12% year over year to $92.5 million. Active buyers remains the same here, but that's down 2% year over year. And actually quarter over quarter is also down a little bit, but not much. Spend per buyer increased 4% year over year to $271. The positive effects of going up market. Take rate continues to go up. That's pretty impressive, 31.3%. That's an improvement of 130 basis points. As for gross margin, GAAP sits at 83.7%, non-GAAP 85.2%. GAAP net income, huge increase there, so we're now at $3 million compared to just $200,000 last quarter, and then obviously a loss a year ago. Adjusted EBITDA $16.5 million and adjusted EBITDA margin of 17.9%. Then if we look at the financial outlook for Q4 and fiscal year 2023, so revenue growth between 6 and 14% year over year with adjusted EBITDA of between $14.9 to $60.9 million, which is a bit of an improvement at the top line from this quarter. And then for the fiscal year, they expect revenue growth of around 7% at the midpoint, and adjusted EBITDA, the lower end has been raised by $2 million, so previously $56 million to $60 million, now it's $58 to $60 million. So probably the market was expecting maybe guidance to be a bit better, but hey, this is what we've got. Then let's dive a bit deeper here. So bring new buyers into the platform. So we see cohorts continuing to stabilize while our buyer base evolves towards a higher quality, higher lifetime mix. They've announced this last quarter already. We're going to see less and less lower end buyers. So yes, you could see that active buyers become a bit less, but they're going after the quality ones. They continue by saying here that core marketplace revenue coming from repeat buyers remains steady at 65%, a bit the same as last quarter. And then with regards to the time to return on investments, which represents the payback period of our performance marketing spend, remained at a little over 3 months. Overall, our GAAP sales and marketing expense as a percentage of revenue was 43.8%, improving from 50.8% in the same quarter last year. Non-GAAP sales and marketing expense as a percentage of revenue was 39.8% this quarter, improving from 44.9% same quarter last year. Then, with regards to expanding the catalog, so in Q3 they added 50 new categories, with the total number of categories now exceeding 700. One of the largest transactions of Q3 was an over $50,000 order on Fiverr Pro, where a global social media company needed help with digital marketing and publishing SEO-led articles across domains in nearly 30 countries. The more of those transactions, the better. Then with regards to promoted gigs and Seller Plus, they saw strong growth there, which has contributed to expanding the take rate to over 31%. They continue to expand coverage of promoted gigs on the marketplace and recently introduced the program to Fiverr Pro for the first time. The program celebrated its 25,000 subscriber milestone this quarter. Then with regards to the matching tool, which is Fiverr Neo, so the excitement around their cutting-edge AI matching tool has also been extremely high, and they've already expanded the rollout beyond the initial waitlist to allow more users the chance to experience an entirely new way to express their need to be matched with the right talent. For example, they had a transport supplier who made their first purchase on the platform thanks to the help they received from Neo. And as for the geographic footprint, so what happens in international markets, they're seeing encouraging signs from their investment in Germany, France, and the Netherlands among non-English speaking countries, as well as in the United Kingdom. As a result, these markets continue to grow faster than the overall marketplace. Then one last thing I want to touch on is this, the fact that revenue increases year over year, but cost of revenue is basically flat to even down year over year. This is a very, very good sign in my opinion. Of course, if you want to see, again, this becoming a high growth company, yes, they will have to have higher expenses. But right now, total operating expenses is basically flat-ish year over year, while revenue continues to increase and the company becomes more profitable. And so if we look at the graph, again, this area right here, $21 or so, is the same price we've been back in March 2020. Since then, if I zoom out, I mean, it's been a roller coaster ride because I have to zoom out quite a lot to actually see the top here. It has gone up all the way up to over $300, and now we're back down to $24. Again, it really depends on whether or not you're in it for the long term. If you want to trade this, fine, maybe we can revisit the $30 or so in the coming weeks. I don't know, depends. I'm not here to trade this stock. I am down heavily on this stock, so yeah, maybe I will buy some more shares in the coming days to bring that average down, because I'm not seeing anything bad from this company, especially not at this price. So overall, good quarter, maybe a weak-ish guidance from Fiverr, but hey, if they're setting the bar low so that they can beat it, so be it. I'll be happy to see maybe a better report 3 months from now. Overall, good company, becoming more and more profitable. This is a growing market that they're in, so I have no doubt that they'll continue to do the right thing. Yes, it is very, very painful to hold the shares currently. Remains to be seen what happens. Of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.